Dirk Schoenmaker, Bruegel. You're one of the authors of a report on the European Banking Supervision system 18 months later, the so-called Single Supervisory Mechanism. How is it working?
It's working very well. So we really looked at the ECB and at the national supervisors. They cooperate very well, and now joint supervisory teams from all countries are looking at the banks as a whole rather than at the pieces of a bank in the different countries. And we were quite happy to see that.
Do you think it's tough enough as it currently stands?
Yeah, to our present surprise, we looked at capital because the supervisor is putting capital requirements, and the ECB increased the capital requirements. So if Pillar 1 are the normal requirements, and in Pillar 2, if you see some extra things, you can ask a bit extra, and they did ask for it. So they increased the capital requirements.
National provisions and the European provisions, are they working seamlessly together?
To some extent it works quite seamlessly, but of course a new organization, you always expect some overlap and data requests, and some rules are still local, some rules are European. So in some areas there is still unclarity. I think on the whole it works very well, but on detailed points we see some inefficiency. In addition, all the decisions are taken at the top level by the ECB, the Supervisory Board. And there you get a backlog of decisions, and we recommend to do more delegation, as any supervisor will do. So they have to learn to delegate some decision-making power lower into the organization.
The Commission published the 5 Presidents' report, Completing Banking Union. Yeah. What are the important elements that are currently missing from the system as it stands?
So the first pillar, supervision, is there, and we conclude it is functioning well. The second pillar, resolution, the single resolution mechanism, is there 2/3. It's too early to judge because there have been no cases. So we have to finish that, the fiscal backstop to that. And the third one, European deposit insurance, is not there at all. And there it is really urgent to do that. We think that's very important to make it complete. Otherwise you're walking on 2 legs. And for walking that's good, but not for a legal basis. Because are you European, like on supervision, or are you national on deposit insurance? Then who's in charge? So I think we really need to finish that in the medium term.
Are we in a safer place today? Are European banks more stable? Are we still faced with the dangers that we have, the type of crisis that we had in 2007, 2008, where there was a direct link between the financial crisis and sovereign debt crisis?
No, I think we are really in a safer place. And because the supervision is better, higher capital. And interestingly, we had last summer the Greek drama. And we have the country chapter on Greece. And the ECB did it behind closed screens, because if you're negotiating on the monetary and the fiscal side, a package, you cannot look at supervision at the same time, because supervision depends on the outcome of that negotiation. So that was quiet. But when we look back how it is done, the ECB did a very good job, kept a close eyes on the banks, and did a proper recapitalization, which is more than sufficient for the Greek banks. So the system has worked there.